Khemka of Motilal Oswal is with us. Siddharth, people are on the fence with this one. What is your expectation post-listing? Given that the overall electric two-wheeler sector is undergoing a bit of a slowdown and Ola Electric is sitting on large losses as well, what's the way forward for this one?
Good morning, Sonia. Yes, so even we are sitting on the fence right now. We don't have a view on the IPO, so we will be waiting for the results that Bhavesh just talked about. So definitely, it's an upcoming sector, but and we have seen the EV penetration in two wheelers to be the highest in India so far. So growth in this sector will come by. But as you rightly said, the company is right now loss making, and they intend to come into even lower price segments where we believe the losses could even increase in the near term. So it's definitely a wait and watch, and the path to profitability, as we have seen in some of the other past new age companies that got listed, that could drive the stock price in future.
All right. Hi, Sid. Morning. Good to see you. And let's talk about a couple of listed companies then. LIC, plenty of retail interest over there because the IPO was disappointing. Post that, the stock nearly halved. How do you read the numbers? Valuations are a support, but your pick from the insurance space.
Yeah, Nigel, good morning. So yes, I think LIC, very good numbers last few quarters. For this quarter, they reported a net premium income of 7,500 crores, the growth of 16%. The new business AP, which grew 9%. And if you look, VNB margins for the quarter stood at almost 14%, 13.9%. And if you look for the last couple of quarters, we have seen that the company has come out with good numbers. We believe LIC has levers in place to maintain its industry-leading position and ramp up growth in the profitable segment, which is mainly your protection, non-par, as well as the savings annuity products. However, given the size, it will take time and requires a lot of superior and well-thought execution. So we expect it to give about 11-12% AP growth, and which should lead to a VNB CAGR of 18%. Valuations definitely supportive. So we have a positive view on LIC and a buy rating. We'll come out with a target price. But within the insurance space, SBI Life is something that we like. Company came out with a decent performance in Q1. AP for SBI Life grew 20%, whereas the VNB grew about 11.5%. Margins have been pretty strong. Again, the expectation is that the AP and VNB would remain pretty strong going forward, and SBI continues to maintain its cost leadership. So we are expecting an 18% CAGR both in AP as well as VNB for SBI Life, which is our preferred pick, with a target price of 1,900.
Sid, what's your take on a couple of these companies? If you have a view on Galaxy Surfactants or a couple of other names, PI Industries and the likes.
Yeah, so we do have coverage on Galaxy. The results were better than our expectation, mainly on back of the lower operating cost and raw material cost, which led to EBITDA being higher. PAT also came in much higher than our expectation. So overall, if you look at in terms of Galaxy, we believe that the outlook for the business remains positive, and the structural story is impact. There has been improvement in the accessibility for the products due to the quick commerce and the headroom for growth in the personal care segment. So overall, what we are seeing that with the continued effort and focus on R&D and the increased share of wallet from its existing customers, this would be driving the volume growth going forward. And even with raw material prices coming down, OPEX being lower, we expect margins to see gradual recovery. Also, higher share of premium specialty products to drive volume. So net, what we are liking is valuations are also comfortable for the stock. The stock has come down recently. So we have a positive view, the buy rating and a target price of 3,450, which is a decent upside from current levels. Even if you look at other companies in the specialty chemical space, PI Industries has been doing well after the past few quarters where the overall numbers were kind of weak, but now things are kind of improving. And again, That is a space where they have consistently done well in the CMS space as well, specifically. So that is again a stock that we like in the agrochemical space. And again, we have a positive view on buy rating on PI Industries.
Okay, got that. Just a quick word, Sid, if you track Lemon Tree, stock was down 10% yesterday. I think seasonally it's a bit of a weaker quarter occupancy-wise for hotels. I mean, EIH was a case in point as well. Do you have a view?
Yes, yes. So if you look at Lemon Tree, yes, results were not that good for Lemon Tree. Seasonally, a weak quarter. And if you look at overall, the revenue was quite good for the quarter, 21% growth, led by good growth in ARR and opening of newer property in Mumbai. However, what was weak was EBITDA margins came under pressure primarily due to increase in renovation and business expenses. The company is renovating its entire inventory by FY26, and hence while in the interim there could be margin pressure, we believe that will lead to improvement in ARR by FY26. And hence, while the near-term pressure would continue, the overall hospitality space is doing well, as seen by the volume growth, the revenue growth for Lemon Tree. So we continue to remain buy. From a long-term perspective, we have a target of 170. But as I said, near term, because of the margins, the stock could remain under pressure.
Siddharth, the stock I wanted to ask you about was Bharat Forge, because in this quarter's numbers, the defense vertical has grown very sharply, and it's a large contribution now to their overall revenue growth. Would you play the defense theme through some of these stocks like Bharat Forge, or are there, other pure play defense companies that you'd rather pick?
Yeah, so Sonia, if you look at definitely this quarter, defense was the key growth driver, while the other businesses were showing signs of weakness. And so, if you look at the overall view, the order book that they have is a mix of artillery guns, vehicles, and consumables. So defense business, we are expecting it to be a key growth driver, and also the strong traction in terms of outsourcing opportunities from China, Europe to India in the industrial segment should be positive for Bharat Forge going forward. Again, it expects its aerospace business to double in the next 3-4 years. So clearly, if you see in terms of the overall numbers, there is a good, strong growth that we are expecting because of the increasing contribution of defense, which should lead to almost 50% CAGR in net profit over the next 2 years. The stock has run up and valuations in line with a lot of other defense companies, pure play defense companies. So to play purely defense, I would still go and buy a Bharat Electronics or a HAL. But if I were to play the overall industrialization along with defense, I would still look at a Bharat Forge.
All right, Sid, thank you very much for that. Good conversation as always, and have a restful, nice Friday and the weekend as well. We'll see you next week.